What's going on, brother?
Hey, Scott.
How we doing?
Good, not bad. Hey, I have a question for you. I can barely hear you. Let me turn
Oh,
this
really?
up.
Okay, yeah.
There we go.
Think-
That's better.
Okay.
How was your Christmas, man?
So chill. Like I got together with some family that was here, and I was like, "You people are crazy. I love you though. I'm gonna go home. I'm, I'm gonna go home and I'm gonna relax for a little bit." And I've never been so grateful to get back to work. To tell you the truth, I had some meetings here with my marketing team, and we're working on some really cool webinar stuff. And it was like, how do we tell the story and all this? And I was like, man, I'm having a great time learning how to doing all this stuff. I was like, man, I love my life where I get to work on things I like to work on and hang out. And I was like, I get to come in and love on you people for a while, called my family and be like, all right, well, one day you'll get your shit together. All right. And until then, I'll be in for a couple hours every few days. That's about how much I handle on that.
Awesome.
How about you? How was your Christmas?
Oh, we had a great dinner. It was more chilled and relaxed. So that was good. Yeah.
Good. What's on your mind today, brother?
So I formed my LLCs with you guys earlier this year, and my parent LLC. So I'm trying to apply for financing, and so it's asking for an industry, what industry to put my parent company LLC in, and also for the 6-digit number that they use. So I didn't know if you had any suggestions for that.
Oh, the NCIA number or whatever that is, right?
Right.
So
I'm asking.
Yeah, well, I mean, it typically I just kind of use whatever is the classification for whatever it is. Like just generally speaking, doing with the LLCs. So if it's like I'm generally doing real estate with it, then I'll just put like a real estate identification number with it. Like that stuff like really doesn't matter. It's like really just for like IRS purposes of them tracking like what our LLCs generally being used for, but there's no real consequence to it. And there's not really, you can use LLCs even for multiple things, but they only let you select one, right? So you can see that it's not really dispositive of anything.
Really? Yeah, I have my two children are one of them's a website, e-commerce, and the other one's real estate. So
yeah, I would just pick whatever you feel like is generally the intent that kind of fits, and then just go with it, because it's not going to be anything on our end that we're going to care about.
Okay. So it really doesn't matter. Okay.
Yeah.
Cool.
Did you end up setting up a private foundation or anything with us?
Not yet. They'll probably be in 25 or maybe 26.
Awesome. We just set up 75 foundations in the last month. Can you believe
That's
that?
a lot.
Wow.
75 foundations, because the tax savings for people are just incredible. I was like, once you start protecting a third of that income,
that's a lot.
Right now, the private foundations all have to make a mandatory donation of 5%. It's the tax and investing scheme with it is like a little bit involved, right? But needless to say, the government's like, we'll let you save a bunch of money on taxes, but you have to donate 5% to like other nonprofits. So now I have my own nonprofit set up where we do, so I can like take in like donations and then create more experience with us for us as a community, like hosting trips for us and doing all that kind of stuff, like through this nonprofit that's about spiritual growth, which I define as like spiritual growth just means, are you loving life? Like that's what spirituality is. How stoked are you on about life? But we should get together and just do like fun things that says that gets us stoked on life. Sounds pretty spiritual to me. Let's do it. Yeah.
That's
so
awesome.
What I got going on right now. I'm sending out text to everybody. I was like, oh my goodness, here. A lot going on. Awesome, brother. Anything else? Anything else pop up for you? I should open up the mic.
Yeah, I was I don't know if you've talked to Eli Facenda, the travel guy, and I'm trying to use credit card points. Use my business expenses to create credit card points to use for personal travel, and they're saying that there's not a tax problem with using business travel points for personal travel. That's what the travel guys are saying. So I didn't know if you had an opinion on
that. Nothing that you can quote me on. I know that
okay.
I know that one of the funniest things that I ran into in my tax classes that I was taking was that why aren't travel points considered income? They have $1 cash equivalent. Anything that you receive as $1 cash equivalent is technically income, according to IRS. It doesn't matter whether it's like a barter transaction. It's the same thing. There's $1 cash equivalent to an exchange of goods. Therefore, there's income, right? But airline points don't have that. And I said, why is that? How's that going to be possibly true? It violates the entire schema behind how do we understand what income is? And you know what the answer is to that? IRS agents put their travel on their personal credit cards, so they get free points.
Oh, probably.
So they said, I don't want to be taxed on my travel points. And I was like, oh, that's how the game really works. The people that made the rules didn't want to pay tax on it. So they said, okay, well, now all of us aren't going to pay tax on it. So technically travel points aren't even income.
They probably have a government credit card that they use, and they rack up all their travel on that and use it for personal use.
I think they use it on their personal. My understanding, anyway, is at the time that these cases came down, is that they were using personal cards and getting reimbursed. So they were getting reimbursed for the expense that they had by their employer. But now there's this extra benefit called travel points. And basically what they said is travel points aren't income, so they're non-taxable. So we can do whatever we want with them.
Well, I like that ruling.
It works out well for us when the people in charge give us a few crumbs. Otherwise, we got to fight for every dollar we get.
Thanks, boss.
Yeah, that's what's up. That's what's going on.
Yeah.
But don't quote me on that. You have to, I would say, probably meet with Pete. Pete's going to be in a better position to know, hey, here's exactly how that's going to play out.
Cool.
Awesome. Anything else, Alan? I don't know if you had anything else, or if anybody else had something else, or if we're hanging out.
I'm done, Scott. Those were my two questions for this year. Yeah.
I have a question. Hi.
Oh, who is this?
Hi, this is Avalis.
Okay.
I'm new to all of this. Honestly, I don't know I don't know if I'm even asking the right questions. But
are you currently like a Royal Elite member, Avalis, or where are you at in your journey with us?
I don't know. I feel like I subscribed to you folks at some point in time, and then.
Oh, okay, cool.
Yeah. Okay, here's my situation. So, I'm a W-2 employee for a large firm, and I am house hacking my house as well. And I don't know how to go about strategizing on how to maximize the tax benefits. And I'd love if there's some resources I could get started on. I think it's too late for this year, but whatever I can do for next year, that'd be great.
Yeah, a little too late for this year, right? To actually put anything in place. But for 2025, it's a good opportunity to do that. So the major thrust is what I would say is the best bet is to say, how are you going to find the right team that has the right plan, right? for your situation, right? And the reason I want to break it down to like that level, right? Because you'd probably be like, hey man, is there like a bunch of like tactical, like detailed things that I should do, right? And but the reality is that it's to get to where you want to get to, it takes so much more than a problem that we can solve like in 5 minutes, right? So here's the way I understood the game. The way I understand the game is that we're all making as much money as we possibly can. And then the next thing we have to do is protect the money that we make. We got to protect it. Number one, we got to protect it from taxes, because that's our first like robber that comes in the night, steals our money, right?
Yep.
Next thing we got to do is protect it from lawsuits, because lawsuits can set us down to like 0. And so, cool, we can't have that. We can't reset the clock as I'm like on our way to getting to where we want to get to. And then we have to have solid investments. And like the solid investments then kick us out cash flow. And then once we can get cash flow to replace expenses, now we're financially free and we're protected from taxes and protected from lawsuits. So now we have something that's called durable financial freedom. But once we get out, we're going to stay out, right? The issue that happens is that it's not just one, each layer, whether it's the tax piece or the investment piece or the legal piece, all of those pieces actually have to be working together in the right way to be optimized. What we found and why Royal Legal Solutions even survives is because if you talk to, I don't know if they're on this call, because we just talked to Alvin and some other people, but what we typically look at, if you look at like everything like our homepage and everything, as we said, we're actually so good at the tax side of things is that we'll get everybody, we can pay for ourselves and everything that we do on like the legal side, the strategy side, and all the other things just in the tax savings. So it's actually ends up being cost neutral. And that's what I think what you're ultimately like what we should be looking for like as an investor, right? Because if you're doing the house hacking, right, what you're probably telling me is like, cool, I'm making some extra income outside of my W-2. And what I'm running it as like a business. And so therefore I can do like that part of my house is actually now a business. So I can do a cost segregation study of like that section of my house to be able to like accelerate depreciation on just that, let's say 50% of what the value of my house would be. And I'd say, yeah, if you're doing that, that's probably on the upper end of what any investment grade CPAs are going to know about like that one particular strategy. Now, there's a totally different question that happens, as I said, are you even running the right strategy though? Or is there strategies that you could use, like saying like using private foundations to protect a 30-year income from W-2? And then, okay, great. Do you have access to syndication investments that are turning a 25 to 35% annual return to you over the course of 5 years and have that in a tax protected shelter? Right. So that's like, that might be like, whoa, what the hell? I wouldn't even have the beginning of a clue of how to set that up. Right. And so, okay, well, that's where like paying money to professionals starts to make sense when they're like at the level of where my company is at. Right. With that. But I would say for what you were looking for this year with what you're doing. And then I'm going to shut up and let you ask a follow-up question, because I know it went on a bit of a monologue here. Is like that's where my mind is typically thinking about when I like hear about like, cool, we're doing some like doing some house hacking stuff, and I was like, great, well now you have an active business, so let's do cost seg studies on a section of the house and then use the depreciation because now it's an actively managed business, just like we would have like with a short-term rental loophole, something like that. Is that in line with where your mind was at and where like things you've been researching and studying, or is your mind somewhere different?
Yeah, absolutely. Yeah, cost seg definitely makes sense. I've heard of it and I've tried to like play around with the numbers, but of course, like I haven't done a study because it doesn't seem that complex of a structure the way it is right now, and appliances and stuff. But at a higher level, I heard you saying that there's like multiple other strategies than just a cost seg, and it requires a little bit more holistic view. Are there other like 2 or 3 things like cost seg that you would recommend that I could just start, researching already before I go for the larger holistic thing? Because
Well, what does total income look like for you? Like, are you in the like 1 to 200,000 a year, 2 to 500, 500 to a million, or million plus?
The second one.
Like 2 to 500?
Yeah.
Okay. And is most of your income is W-2?
Yeah.
Okay, cool. So I don't know if you were on the call earlier, but I like set up so many private foundations here in the last like month. It's insane. And they're all for high income W-2 earners like you. And that's because like the strategy that we use, that uses the private foundation and uses the deal lists that I provide people of like, here's the deals that I'm personally investing in, has crazy synergies that comes with it, that where W-2 earners always told you can't do anything besides short-term rental loopholes or house hacking. This is a game changer for what the impacts are. And my sales team or my advisory team that you meet with when you schedule a consult, you'll pay like $150. They'll explain to you like, okay, here's how this works. And this is why it's so much better than short-term loophole. But for this year, I would just do a paper cost segregation study, meaning like don't pay anybody to do the study, just do it on paper and then provide it to your CPA or hire Pete. And Pete can help you file those tax returns with that, because that's the way we'll do it for people that are in your position.
Okay, great. Thank you.
Yeah. And then also make sure now that you have an active business though, try to get your cars and a home office deduction. Make sure that's going to be part of your tax return as well too, if you haven't already. And if you have kids, then also like pay whatever like money that you're creating through your house hacking business should all either get like consumed by the cost seg study, by the home office, by the autos, or by sheltering the money through your kids.
Right.
Like, or family members aren't working. But those are your big ones that are like low hanging fruit.
Gotcha. Great. That's what I was looking for. Thank you. Thanks for helping me get started on the low hanging fruits. Yeah.
My man. Yeah. And I get into meeting with the team as soon as you can, but because you're leaving money on the table right now. And like, they'll be able to show you how. Like,
hey, Scott.
Yep. What's up, brother?
Hey, this is Mike. You reached out
Mike.
to me earlier.
Hey, Mike.
So Premier member, trying to get everything all set up,
Yeah.
Brazilians, my situation to some degree, but for those that are on the call, I've got, large amount of income, over $1 million plus, a couple of different businesses that are all going full steam, and whatever else. So did set up your family foundation. Like we said, I'm about to do the donation. Of course, I don't have the IRS ruling yet because that was only happening in the last 30 days or so. Pete just responded. So my understanding was that I could give away certain amounts of money in scholarship formats as long as I did it through a formal process and whatever else. And that would count towards that 5%. Pete just confirmed you're good to go. So I'm assuming.
Perfect.
Okay.
Yeah. So then you should be set.
That being said, I am really interested in hearing more about your specific charity, because I got some bits and pieces of it, like usual, that it was something about, maybe making a donation to that and then being able to travel and have some fun with some like-minded people and some things like that. So if you want to explain that, I'll tee it up for you as if it was a volleyball game, and you can now hit it.
Here's the big pitch. First of all, I think that's awesome that your mindset is in doing the scholarships, and I'm glad that Pete was able to work with you on saying like, okay, cool, you can do the scholarships, but it needs to be done in like it needs to be done in a particular way. I'm always concerned about direct gifting of scholarships because of like if it goes to like disqualified people, then there can be like some complications with that, right? However, let's get you to where you want to be to do the scholarships and to handle everything else that you need to, right? So essentially here's what I did, right? It's because there's so much, as I set up my own 501c3 full-fledged normal charity, right?
Public?
And then
it's a public.
Yeah, public charity. Yeah. Mm-hmm. And so the intention of this public charity is really just set up not to solicit grants from the outside world or to like be anything that's like that, right? What it really is intended for is to say, well, here's a place that if we wanted to connect on like what is the next level of what happens after we have all of the time and money.
Which is a problem.
Because it's the second peak. The first peak is actually just time and money. The second peak is how do you live life once you have all of the space and all of the resources? And people only focus on the first peak.
Well, some of it's mine because you have a guy like me who's used to working like, 90 hours a week or whatever it is. Now all of a sudden people are like, why are you working so hard? You don't need to work anymore. But yet I don't know how to do anything else, right? I mean,
it's what I know.
It's what I know. It's what I've been. I've done.
It's what I know,
years, right? But then there's other people I know that are just making money hand over fist. There's a guy that's actually like a couple units away from me. He's making, well over $200 million a year, but he's in the same boat. Why is he buying businesses? He's making $200 million a year. Why does he care? Because the answer is, it's what he's always done. So he just keeps on.
What I know.
It's what I know,
right? And so this to me is actually, it's the most interesting question, right? Because if we looked at it, what we would say is, after I have all of the time and money, what do I typically will go back to? I will go back to creating things called time and money because it's what I know and it's what I feel comfortable with, right?
But you want purpose, you want purpose and impact, and then you also want to have fun and enjoyment, right? So it's some combination of those two, and purpose drives to some degree of, at least for me, trying to figure out how I take the wealth that I've accumulated and help other people. And I get some joy out of that, but I also want to have some fun, right? I've held back from like, I'm in this garage condo. You really can't see it, but I got a couple of really cool cars downstairs and some other things like that. But, you want to go off and have fun with a couple other people too, right? You just don't want to do it all.
Yeah. So that's to me with the nonprofit, the best way I've been able to figure this out is like what we have to do then is we need somebody who really understands about how do we break down like the wheel of life. What are the sectors of my life that I actually care about? Right? I care about like my family, my fun and adventure. I care about like my income. I care about my charitable giving. I care about like all these different like sectors of my life. And there's some, you can break them up somewhere between like 8 to 10. And then all we have to do is then have somebody who can help guide us to say, okay, inside of this wheel of life, what are the things that I want to focus on that if I focused on those things, I would feel like I'm making the kind of progress in my day-to-day experience of living that I give a shit about. Right? And then we say, cool, now that that tells us what it is we want as a different life experience. Now, how do I actually make those life experience change? Oh, well, this is where I need to be surrounded by a group of like-minded people that are on a similar mission. This is where I need somebody that can guide me to keep me refocused on like, oh, remember, these are the things I really want, not the things that I feel most comfortable doing, but it's these other things that probably feel really uncomfortable, but those are the things that I really want. And then I want experts, people that have like been really good at accelerating others, like into growing that area of their life. Right? Like if you're going to the gym, it'd be like the equivalent of a personal trainer. But what is that inside of like my relationships with my wife or my husband or with my kids, or my ability to just experience fun because holy shit, everything in life feels like work. How do I grow those areas? Right. And that's really what that Royal Life is about. It's the best I've been able to R&D over the course of 2 years between taking like master level degrees of like life coaching training to living with the Yawanawa people on the Amazon to living in ashrams to ice climbing in Ouray to all of this stuff to be like, cool, I think I have a pretty good map about like how do we get time and money? Here's how we accelerate our life experience into being epic.
Cool. Well, I'd love to learn more about it. I think we have an appointment later this week to talk about it. But
yeah, let me drop a. Did you see that thing that on Zeffy? I think that was on like a donation page, but let me drop that link in here because that actually has like a 9-minute video that it goes through in much more detail. And let me go ahead and just drop it in the chat once I can figure out how to do that. I don't think All right. Actually, I'm just going to text it over to you, brother.
Yeah, you got.
Oh, and by the way, too, I went ahead and crunched like the numbers for you. And just so you know, like if this is your first year, like donation, right? Where you had like your donation amount that was in there that you texted me about. Yeah. It's only one. It's normally it's a 5% donation, right? But here it's only 1/13 of the 5%. So you're like under $1,000 for like your total amount that you need to dispose.
Yeah,
of.
I don't know if I need to do that before the calendar year. I mean, this was created in December of 2024. I'm assuming I have 12 months to do the donation. So that would mean
that's what Pete told me too.
It's a 2025 event, really. But yeah, we also have the cost segmentation study in progress, just so you know on that. You can also do that for we have a house that's in Florida that we're going to do an improvement to, and I guess you can also write off the improvement at some point in time.
Cool.
This year, I think that's at 60%. When I bought that house, it was at 100%, so I get 100% because of the buy.
Awesome.
And then I'm really looking next year for you to show me how to do more real estate stuff. So I don't have any real estate. I decided at the last minute to throw more money into oil and gas. For those that don't know, you can write off significant portions of an oil and gas investment. So I'm doing oil and gas this year. So throwing a couple to get my numbers to where I want them to be. My net tax, I'm hoping to be around 15% on net income, but I don't know if that's possible. We'll see how the math all runs out, assuming that all these spreadsheets work out. But that's the general gist.
Beautiful, man. I love it. Yeah, well, let's be in touch about it. Make sure that we get everything executed. Name of the game is execution.
Well, right now it's all about the funky thing with the post office, I guess, that I have to go do because of the fact that it's not all formed 100%. So
I would also say too, with that whole thing too, if the post office is like too much of a drag, you can also just like take a video of like you making out your check, because the whole concept, right, is like and there's metadata that's corresponding to the video, and like as a litigation attorney, I'll be like, that's fine. The most conservative thing you can possibly do is have like a third party date stamp, right? Which is post office. And that's what my team is always doing, is we take aggressive strategies and then we say, what's the most conservative way to do the aggressive strategy? And then we meet with Scott. Scott's like, yeah, but we could also do it this way and that'll work, But like,
the way with the post office, for those that don't know, is you basically just take a check, put it in an envelope, go to the post office, they stamp it, and then it mails it to your quote unquote foundation, which is probably your home address. You then send a response back with a receipt, and you do the same stamping thing. That's all cool. The only downside to that is there's no physical evidence of actually writing the check, right? Anything could be in the envelope. So I like your idea of videotaping it before the end of the year, because I don't know what was in the check, what was in the envelope. Whatever I said was in the envelope. I mean, so it's kind of hard to say, right? So someone could argue that, it wasn't quite the same amount or whatever the case may be. So I think there's a little bit of that. Perfect.
Okay, cool. That's good feedback.
I don't know if you have any other options on dealing with high-end vehicles. There seems to be strategies with how you some people are able to write them off. Some people aren't. I've looked at and explored things like having a dealership or trying to come up with ways to do that. Some people have supposedly figured out how to do it. I don't know if you've ever thought about that, but high-end Porsches or high-end cars, how do you buy those, hold them for a little while, sell them at a discount, but somehow take a write-off on the inventory of some kind? I don't know if you thought about that, but that's a interesting concept that I've been trying to figure out for a while.
Yeah, man. Well, let's find somebody who specializes in it and throw some money at them, and then go buy some toys, and we'll call it an R&D expense for the law firm.
All right. Well, I'll be interested to look into that. So that'd be cool.
Yeah, dude. I'm down. I'm always down to blow some money on having a bunch of fun. That's the only thing there is left in life.
Sounds good. Do you travel? Do you travel with your foundation, by the way? Does your foundation pay for travel?
Yeah, because I'll do like events, right? So like my foundation, my nonprofit, right, is structured such that I do a ton of like educational stuff, right? So there's because
you do that, you could basically do stuff to go in Europe and go to other places, and have
whoever I want to go speak, right? I just set up like a speaking engagement, and then I can go wherever I'm going to speak, and like, where can't you set up a venue to speak, do a little publicity for it, pull in some people. And if you're in Croatia, you're in Croatia. And if you're in wherever, you're in wherever, for however long you want to be speaking there, doing whatever it is. My thing too is also like couched as like a spiritual organization, right? My nonprofit. It's like about like this higher level of living of life from like a place of like inner peace and clarity and enjoyment and fun and all of that stuff, right? So that's really easy for me to go and talk about, because I just go up and show up, be like, God, it looks like you people look terrible. Like, what's going on? Like, let's talk about how your lives are going, because I'm going to tell you, there's a path to being amazing, and like it's available to everybody. So let's talk about that.
You sounded a little bit like Tony Robbins there, but yeah, we're good.
Yeah, but I actually built a law firm that does it as a turnkey service. Way harder than Tony Robbins. Way harder than Tony
Robbins. I got a
long
history there. I can tell you one day over a beer, but yeah.
Way better. Way. That's awesome. Awesome, man.
As long as you're not going to ask me to like, jump off of poles or like take 35-foot firewalks, I think we're all cool.
Not unless that's what you decide you need to do. I don't think you need to do, I don't think we need to do any of that stuff, man. I've done all that.
Been there, done that.
Like,
yeah. I've been there, done that.
I've been there, done that, and been like, okay, cool. I get it. Some people might need to do that. It's totally not necessary.
Sounds good. Well, I've dominated the conversation, so I'll let somebody else ask some questions.
I will open up the floor a little bit here. If anybody else.
So talk to me, since there's no other questions, talk to me about how syndications work when you do real estate. So you're going to go off and buy a house, let's say, an investment property. Let's go with a multifamily home, 4 to 8 units. So you put in, let's say $1 million into an 8-unit building, and you're going to do a cost segmentation study. I mean, how does this thing turn into an investment where it basically pays for itself to some degree or becomes profitable without locking up the $1 million from a risky perspective? I mean, there seems to be this whole real estate thing, right? You got Grant Cardone out there trying to get everybody to buy up Fort Lauderdale. Sure. You've got some other people trying to do other things. But what's the circle, if you will, of how you basically play the game, where you're trying to buy it below replacement cost, you're trying to get a depreciation on it that pays for some degree of the tax advantage of doing it. And then, of course, you're getting monthly income of some kind based upon the rent, and then appreciation on if you bought in the right places.
Well, the first thing I think to understand about syndications is that syndications are, another way to refer to them that I like better is an asset-backed business, because it's an active business that just happens to have an asset. Or there's a ton of like businesses that don't have assets, right? Like if I sell like ebooks or something, right? But this is just an asset-backed business. So instead of thinking of like syndications as I'm doing like one thing, you're actually having to do two things. And the first thing you're having to do is say, do I understand that asset? And the second thing I have to do is, do I understand that entrepreneur? Like that the jockey, right? So understanding the asset is pretty predictable with a couple of variables that are crystal ball-y, right? So like things like apartment complexes, for example, if we're going to talk about real estate, are pretty predictable for us about, what's going to happen to that apartment complex over time. Because we can say, well, generally apartments are going to do really well when we have increasing population. An increasing population is usually like long-term projections. It says like over time, like it takes a lot to sway a population like up or down, right? So those are strong macro indicators that says, great, well, generally, let's say like apartments are going to do well here, right? And we might say like, and that would be what we'd say is like we understand that asset to a relative high degree of certainty on a macro indicator. Then there could be some micro indicators that can impact like apartment complexes, for example, which would be like what's going to happen with interest rates. And you'll find like a syndicator would say, well, what's going to happen with interest rates can determine the value of that apartment complex based upon how financing might work, which actually could be part and parcel to their exit strategy, which is we're going to replace the bathrooms in the apartment complex. We're going to gut all of those. It's going to increase our rents by 10%. And then we're going to refinance the apartment complex. Well, note that whole strategy actually depends upon the interest rates allowing them to do that and then still being able to cover. Does that make sense?
Yeah, right? No, that explains the Grant Cardone theory. But yeah, that's interesting.
It's where a lot of people actually ran into trouble before, right? It's because nobody anticipated. Remember when interest rates were like nothing and then skyrocketed? That's why everybody got in trouble, because everybody's like, well, who could have seen this coming? Was that what everybody said, right? And then they end up with problems. So, and a lot of Ponzi scheme stuff are things that people didn't even intend to be Ponzi schemes turned into Ponzi schemes.
Yeah,
right.
That's what I'm worried about. What about buying, like one of my friends buys businesses. He buys distributors. Let's say an electrical distributor, or maybe it's an AC, repair business, or maybe an electrician or something along those lines. There's assets associated with it, right? There's brand equity, there's trucks, there's wires, there's perhaps inventory, there's, goodwill, there's all this stuff, right? So if you're buying a business like that and you're getting a certain amount of EBITDA based upon that buy, you can also get an SBD loan or something like that, or get a small business loan to basically finance it, and then turn around and pay it off after a couple of years to basically then turn that into an income generator. What's your thoughts on something like that?
I think it's awesome if you know how to do it. The question I always come back to is like, is it what's the point? To me, the point is not to get good at investing. The point was to go have an amazing life. And so what I targeted my whole build around is what is predictable and effective income generation that I can get teams of other people and systems and processes around to make work for me. So when as cash come available, I get to run my cash flow and net worth analysis and say, great, this amount of money I need to kick in this particular type of investment because I'm actually busy living life.
Makes more sense.
Right.
So
if you can find the system and the process to make that whole business plan work of that kind of investing, I'd be like, great, maybe that's worth figuring out. But it's gotta be like, man, that's gotta look pretty good because I've done a pretty good job of being able to figure out how to do like a 18 to a 30% return pretty predictably.
So where, given that I'm the premier, I gave you a boatload of money in the year and all the rest of that stuff, I have yet to figure that part out. So that's just a conversation you and I should have to figure out, like, how do you get to the 25 to 30%? And the only answer I have right now are my existing investments along with my oil and gas stuff, which really has nothing to do with Royal Legal. So it'd be interesting to know more about some of those.
Check out, have you gotten the list of the syndications that come through that are ones that like where I'm putting my
I got one like when I first joined, but it most of them didn't seem to pan out. They were very they just kind of like, here's your 1-800 number, call the guy. And I was hoping for something a little bit more formal than that. Like, let me talk to Jeff and let me set up a call and let's have a conversation with the guy versus like, here's a list of a spreadsheet with 1-800, make my day, and just randomly call them. I'm like, yeah, that's it feels like the reverse scenario of getting the 8 million calls to go buy silver coins every 5 minutes, right? So it's just, I'd rather have an intro and understanding of the business and sort of a roadmap of what you've done and some sort of understanding of saying, well, look, here are the 5 investments I would make or 6 investments I would make. Here's the pitch behind them. This is why the timing is good versus a list of things that were in the spreadsheet that I'm not even sure were put together recently or put together a while ago.
Perfect. So the current plan that I have around this is because like this is the feedback that I've gotten from people too, right? Which is like my perspective, right, was I've gone through thousands of deals through tons of deal networks and investment clubs or whatever to get to this list. And then I'm like, here's my holy grail of a list. I will now give this list to you. But from the person receiving the list, they're like, you just gave me a piece of paper. Like, I don't get it. Like, what is like, I need more to like get us the context of what this thing is, right? So my plan is like coming back in and starting here in 2025, what we're going to start doing for all of our elite members is going to, there are a couple of things that are going to happen. So one is that we're going to start doing monthly calls to be able to talk about specific deals, meta concepts. How do we get even to this deal? So we can say, can I appreciate why I'm even looking at this thing right now? And then how do we analyze this deal in comparison to other deals that might not even be on our list? Right, to say like, okay, cool. This is how we're going to use like the zeitgeist.
That would be a lot more helpful because I get that for my stock deals and for a lot of things that I do, like IPO, pre-IPO kind of wise, right? I mean, people pitch me all the time for stuff, right? So to have a pitch, to understand it, to understand where you're coming from, and to do something on a monthly basis to get more interactive would be great.
Yeah, I think that's where we go. And then I think in Royal Life, the intention is that like the Royal Life members, we have something that's like more exclusive, like one-on-one access with Scott. There's something about like, what do you get like with that being part of that like group that's above and beyond like a group conversation, because those can go into like much deeper topics when we're talking one-on-one. Okay, cool. Thanks for bringing that up because that's awesome. I keep like, that tells me exactly what I need to build or like have figured out. Was there somebody else that wanted to comment on the business, the small business pieces, or any of the other pieces that we're talking about here?
Yeah, I wanted to comment. I was so Michael.
Oh, my brother, long time no see, man. How we doing?
I'm doing well. How are you?
Hey, man. Yeah, good.
So, so I was just going to comment, Michael. It is. There's definitely, buying a business can be lucrative. Obviously, right. That's why private equity has been getting into that. But what stopped me from doing that was I just realized I was trading one job for another, and so that's kind of what stopped me. But more power to you. You probably have way more experience or better at setting systems than I am. So
not necessarily. I'm a software guy, right? So I buy software.
Cool.
I do pre-IPOs. That's where I've made most of my money.
Very
I'm just looking at some of these other guys that are doing a lot. Let's say the next level above me, right? They're making they're making a few million. Tens of millions of dollars a year. And I'm trying to understand how they do it. Some of them do it through franchises. Some of them do it through buying businesses, other investments that they make. But it's kind of like I'm always looking for how do I get from where I am to the next thing. And the best way to go do that is find other people who are already doing it.
Yeah.
Try to figure out what do you like about that?
Yeah. So with that point, actually, Scott, I wanted to ask you how, I know last time we talked, you were investing in like doing some stuff with NERP. Wanted to know how that was going. Kind of your feedback on that. That'd be really helpful.
Yeah. So what I found out about algorithmic investing, because it's the only thing that I've like algorithmic Forex investing is the only thing I found that rivals active business returns. So what I was playing around there is to say like, how would that go? So a bunch of people that were investing in algorithmic in the algorithmic investing world, like lost a ton of money. Maybe because like events started happening that hadn't happened like in a couple of years. And so one of the great things that I'm really grateful for is that like I learned enough to say like we needed to diversify like the number of bots and the currency pairs that we were using to be able to protect from downside risk. So
very cool. Okay.
So it actually
something you're still active in?
Yeah, I'm still active in it. I'm just a lot less bullish on it, on being something that I'm ever gonna like open up to. Because I was like, wow, this is going really well. Would I want to open something like this open to like an investment community, taking investors? And I'm like, I don't think anybody else is going to have the stomach for it, because you actually have to ride out like some pretty harsh stuff that'll give you some ulcers if you're not ready for it.
Yeah. I mean, especially in Forex, right? The leverage is 100 to 1 or something like that. Yeah. So it's very cool. All right. Thanks for that feedback. I appreciate that.
Yeah. Yeah.
Also, there are also rules that changed. I mean, back prior to FIFO, when you're able to basically do things like probably about 5 or 6 years ago, the profitability aspects of Forex trading was pretty high. But when they started introducing regulations into it with FIFO rules and things along those lines, it became a little bit harder to trade. So.
Oh, wow. Okay, cool. I didn't even know about that context. That's great.
Yeah. First in, first out was sort of, prior to that, it was wild, wild west. And yeah, the profitability of Forex trading was significant, 40, 50, 60% on trades. I mean, it was crazy. But then regulators stepped in. I think it was in like 20, if I remember right, it was like 2015, 2016. It's been a while since I played Forex stuff, but I did do it for a while. Same thing with options trading. It's basically the same rules you have in options trading you now have in Forex.
Awesome. Okay. Well, yeah, I mean, maybe even more reasons if it's like starting to get even more and more restrictive,
But now you've got the wild, wild west on doing derivatives for Bitcoin and for those things. So if you've looked at Coinbase recently, they just opened up a bunch of derivatives around being able to play effectively options on alternate coins and stuff. So if you're really looking for like highly leveraged, large margin, high risk, high reward type of things, you can kind of look into some of those things.
I don't mind like looking at those types of asset classes as long as I'm with somebody else who is like says I dominate over here. Like I got like the magic stick about how this is supposed to work. And then usually those people within like it doesn't usually take too long for me to be able to extrapolate. Do they really know what they're talking about? Just because, if you know how to poke around on ideas, you can usually figure out if somebody knows what the hell they're talking about or not. And then they're the ones that are going to like hold the energy for it. Like they're going to hold the focus to it, because I'm not going to do that anymore. Like on a day-to-day like thing for like in that way, like I'm on the next phase. So I'm not the right guy to do that, but I'm like, I can fit so if you know people that are in that area that are rainmakers on like being able for like vetting pre-IPO stuff or on any of these things, like I'm always looking to meet new people that are amazing. Like who are the other wizards that are out there?
You just have to, like you said, you have to have the stomach for it. It's not your traditional investment. I mean, I was pre-IPO with Airbnb. I was pre-IPO for Palantir before they were ever really known. Now I'm in a company called like some of you may know who Prometheus is. You may or may not, but they custody crypto for banks. And so getting into those deals early on, it's high risk but high reward, right? You're looking at anywhere from 5 to 10x returns on some of them and 0 on others. So it is a little bit more of a gamble.
Do you think about that too, like Michael, in terms of like your portfolio allocation of like how much do you have inside of like as a percentage that you have inside of like that piece?
Yeah, I have roughly around anywhere from 5 to 10% of my portfolio is allocated to pre-IPO and stuff like that. But those are home runs, right? 10x on a $400,000 investment, make $4 million. That is life changing for me pretty significantly, right? So if you can get those types of things. Palantir, I think my basis was around $5, maybe $6 a share. Today it closed around 82. I think it's 83 right now. So those are significant upsides. From pre-IPO to for those types of companies.
Nice win.
If you can find those, they're great, right? That being said, there's a lot of pharmaceuticals, like 2 pharmaceuticals I did Cura, which was one that did really well, but then another one, Checkpoint and Mustang, which were looking kind of pre-Ozempic kind of things. They didn't turn out. I just broke even. So I got bailed out of them when they went public and got out. And they haven't really gone anywhere, right? So it's not all panacea, but I mean, there are, for the right ones, there are interesting IPOs to be in, but they also have liquidity problems, right? It's unknown. I think at Palantir it took 6 years before I saw any of my money, right? So you put money in, and then 6 years you're just sitting there like, wow, I got a piece of paper. I hope they go public one day, right? And you hear them in the news every now and then, but that's about it. So it is that's not as interesting or as fast money as, let's say, options trading or forex trading, which you're seeing immediate results probably within hours or days.
And I was curious too with that, Michael, is like, do you have a particular exit strategy that you use for some of these? I know that there's a lot of guys will talk about as like some type of a laddered approach, certain hurdles getting met, and that they're like constantly withdrawing profits and reducing their exposure.
Well, there's lots of mistakes I could tell you about that you don't want to do. Like, you don't want to do ISP, what are known as IPSs or whatever. I forgot the name of them, but basically they set up an LLC. You buy into the LLC. The LLC basically is the owner. You want direct, you want to be a named investor that's on the website that says, yep, you invested. It's, your money, you're there. So that way, when you get distributions, or if they pull out distributions, it's not the LLC that gets the distributions, it's some money manager who makes a decision about what to go do. You get the direct distribution if everybody else does. And so there's things that I've matured through, but in terms of significant exit strategies, usually it's, go public, right? I mean, you're looking to go public. Usually you're investing in a company that's over $1 billion that's planning to go public within 2 to 3 years. Like SpaceX was like one that I did like 5 years ago. And, that's valuation wise has gone up significantly. Axiom Space is another one that's gone up significantly. Lesser known names like Laconic is they trade in carbon credits. They create the carbon credit market. They'll probably go IPO in 2025. So how you get into those, it's taken me years to figure out the network to get into them. But once you get into them, then they give you the pitch. You decide how much you want to put in. It's a 6-figure investment usually. With the upside being you're investing in 3 to 4 of them, and you're expecting maybe 2 of them to pay out, 5 to 10x, and you'll lose on the other 2. So it's a different game.
I love it, man. Well, that'll be super fun. I look forward to being able to learn more about like how you're doing that kind of investing and like what goes into it. Because it sounds like you've done like a ton.
Well, if 2025 turns out and I get 2 IPOs, then 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 we've leveled up, right? It's like if this was a game, I just went woo, level up. But we'll see if they turn out with Trump being there and more M&A activity happening. I'm hopeful that the IPO market recovers from where it's been over the last 4 years. So we'll see.
Yeah, no, man. No, I hope it blows it out of the water for you, brother. We'll get it. Yeah, it sounds good. Sounds like a bunch of good stuff. It'd be interesting to learn. I'd love to I think it's really apropos inside of the community, especially among the higher net worth community or higher earner community, to start having those, to start looking at, start getting really keen about talking about concepts around portfolio allocation and what are some of the riskier investments. Because a lot of the stuff that I've focused on has been the stuff that I look at as to be I want things that are really boring, exceptionally boring, and really predictable,
Berkshire
replace
Hathaway,
bathrooms in a hotel,
bonds, municipals, get your 4.5%
to 5%. Not that boring.
Yeah, I get it.
I like a little bit more spice in my life, than
and I have a significant portion of my portfolio that is in bonds, that just pays out municipals or whatever because it's free. But it depends.
Yeah. I think it's a sophisticated conversation to have that I think a lot of people would, because what we're finding right now too is especially with the community that's being built here is that we're starting to actually attract a lot of people that are making a lot of money and have never done anything with their tax investing. And so they're coming in from the very ground up about okay, how does this even, but they're really, really high IQ. So these are some of my favorite people in the world to deal with. I was wow, you have a lot of resources. You're really smart. And there's a lot of gain that we can make by working with you. That's awesome. There's a ton of potential here. So we'll be working here in 2025. I'll be trying to host a lot more space to be able to create that of cool, who do we have in the community? Who can I pull in to help us up level, what's happening here and create more opportunity. So it'll be great. I'd love to have you involved.
Yeah, it'll be fun.
All right, guys, I'm coming up here on my hour before I got to take off. And there's wondering any last minutes, questions, comments, concerns, clarifications, predictions, lottery numbers, wild speculation. All right. Cool. It's always good to see everybody as normal here on these lives. If you haven't, if you're getting some value out of these things and coming in here, then I would really appreciate is some way of communicating you that value to me. What are you getting out of these calls? That makes you want to show up here. And if you're too high or too shy to be able to share about them here publicly, even if you just email me back on that and say, hey, cool, this is what I'm getting. This is what I'm seeing is valuable. This is what I'd like to see. Those kinds of things. So I can know how to be better service through hopping on. Anybody before we wrap up here want to share anything that they've been finding value about showing up?
I think this is great. I mean, Scott, you did all our trust work and stuff a couple years ago, and your community and your attorneys have been very helpful to me, and seeing how you've grown in this network, I find it to be very helpful and helps me push myself. So I think you provide a lot of value to the real estate community.
Cool. And then what are you getting out of these calls? Because I think I saw you on the last call I did too, right?
Yeah. I think for me, just listening to Michael talk about some of the stuff he's doing, I've invested more in the real estate front. I'm still a W-2 earner. I haven't even thought of some of that other stuff that you guys were talking about as potential investments. So for me, I find value in that. I think it kind of pushes me to look in other opportunities that I haven't explored yet. So for me, it just kind of pushes that growth mindset.
Cool. Right on, brother. Well, it's great having you here. Appreciate you coming.
Yeah, thanks. Thank you.
All right, everyone. Wrapping up for today. My pleasure. You guys be good. Enjoy your holidays here. I'll probably catch you again here next week. Take it easy, everyone. Bye now.